Thanks for joining us. My name is Alex Kalelis. I manage the business development team at Ripple Prime in the Americas. We're a prime broker and a clearer for traditional and digital assets. We have an esteemed panel of guests. I'll allow them to introduce themselves.
Awesome. Should I start?
Please.
Hello, everyone. Great to be here. My name is David Lawant. I'm head of research at Anchorage Digital. And Anchorage is a player in crypto institutional infrastructure. We provide a bunch of services, including prime services, spot trading, derivatives trading, lending. We're one of the market leaders in custody. And we're also the first firm to get a crypto company to get an OCC charter. So I'm very excited to be here and to discuss all the exciting things in the industry.
Hi, I'm Jody Mettler. I'm the Chief Operating Officer at BitGo, as well as our Head of Custody. So BitGo, if you're not familiar, is also a digital asset infrastructure provider, very similar to David. We are also a wallet infrastructure provider, so we do everything from actual wallet technology to the regulated custody layer, and then financing options on top of that.
Hi, I'm Joe Armeo. I'm a Senior Portfolio Manager at Galaxy Digital. I just joined Galaxy last month from Senator Investment Group, the hedge fund, and was previously at Blackstone. I'm joining Galaxy to launch a fintech long-short equity fund that incorporates digital assets and digital asset themes.
Hey everybody, I'm Scott Lowen. I'm the president of Pantera Capital. Pantera is the first institutional alternative investment manager in the blockchain and crypto space. We manage about $4 billion across early stage venture, liquid tokens, private tokens, and special opportunities.
So the new architecture of crypto finance, liquidity, custody, market entry, we've seen a shift in the market dynamic in digital assets where you've had retail-driven spot venues. Now you have entry of institutional infrastructure in line with what you would see in traditional markets. Maybe a question for everybody. What's been the structural event within the market or a series of events within the past 12 to 24 months that has been observed by the market in general and more specifically to each of your businesses?
I'm happy to start.
Yeah.
Go for it.
I would say from our perspective, it's actually been the introduction of 40 Act products wrapped around crypto assets. Even though the industry has been around now for more than a decade, continued to evolve and become more institutional, access and adoption, I think, is still kind of one of the fundamental things. And so providing an opportunity for both retail investors and institutional investors to access crypto assets with a wrapper that they're already approved for and comfortable with, I think has been a massive unlock.
I would agree with that. Institutionalized access has definitely been, driven largely by regulatory changes that have happened over the last 24 months. But I've seen a definite shift from people asking, how do I safely access this market, to now to how do I operationalize it? Because they do have the regulatory framework, the governance behind it, the fiduciary accounts. So yeah, I completely agree.
Yeah, I think I'd say the Genius Act has been a big unlock for blockchain infrastructure being enabled as a layer that traditional institutions can build on. So that helps Galaxy as a corporate. We're a $10 billion NASDAQ listed company that builds on blockchain and delivers blockchain services to other financial institutions. And also as an investment fund, we can invest in these different themes, right? So what's Visa doing on chain? What's the ICE doing on chain? What are all the payment processing and broker dealers doing on chain? So we see this convergence of the digital infrastructure and the traditional companies that's enabled by both the regulatory 180 that folks have described and also the Genius Act.
I agree with all these milestones. Perhaps I'll add another one that is happening right now. It's unfolding right now, and it might be one of the most important, that we're starting to see a lot of not only centralized crypto businesses, but also traditional finance businesses starting to engage a little more with decentralized finance. We're starting to see the emergence of things like decentralized vaults as maybe an ETF 2.0 wrapper, because it provides a bunch of advantages over maybe the current ETF structure. You're starting to see probably the largest private credit fund in the world engage with a decentralized credit platform called Morpho. Starting to see the largest asset manager in the world engaging with Uniswap, which is the largest decentralized exchange. So I think I can see kind of the arc here going from ETFs and then stable coins, now probably reaching escape velocity. And I feel like there is another very exciting new direction that we're taking here that involves tokenized securities, tokenized assets, and all these interesting DeFi primitives. So I feel like the industry is engaging with DeFi in a way that it hasn't in a while. That's a trend that is unfolding right now.
How do you guys think about liquidity, sourcing liquidity? You have OTC desks, venues, centralized exchanges. You mentioned DeFi. How has that evolved over time? And then I guess how has liquidity depth changed with that, similar time period? And I guess we could even look at events from October, view from the panel on observations in the market there.
I can take a step there because I'm allocated in the global markets kind of sell side team. I think this speaks a lot to the evolution of the asset class. And gone are the days where most of, let's say, Bitcoin's price formation activity used to happen on spot and perps markets, right? We, of course, had a lot of milestones, a lot of important signposts. And now you have this kind of hybrid TradFi and also crypto native infrastructure so that kind of determines a lot of where the price of Bitcoin forms. And even though, Bitcoin has been a liquid asset for a long time, and I think nowadays, if you're running a sell-side trading desk, I think everybody is already connected to most of the, or to all the important counterparties in the industry. And I think the main difference now and the main points of attention is paying attention to kind of counterparty risk, being connected to the right venues. But so I think things have been evolving more on that side of things. Alts have also become more liquid, especially the ones that are emerging as interest to investors, the one who have a more like fundamental case, maybe the Solanas of the world, maybe the Hyperliquids of the world. Like Hyperliquid is a name that you wouldn't hear at trading desks until like not too very long ago. Now sometimes it's one of the most traded assets. So we're seeing a lot of liquidity picking up on the high quality alt space.
Yeah, I'd echo that. I'd say, if you look at Bitcoin and Ethereum, they probably have the same market depth and liquidity as, mid-cap equities for the core of the trading day. You can get very tight prices and move decent size. I'd say the thing that we need to keep working on is that liquidity profile drops off pretty steeply, right, as you sort of move into the alt space with a very long tail. And I think that's a give and take between the assets themselves, right? Proving out their sort of business case, as well as market makers just starting to be more comfortable. And that ultimately relies a lot on the architecture that you're talking about.
So one interesting thing is because of all this regulatory progress that we've made, we have a view that we're calling it the great convergence, right? It's no longer two siloed ecosystems on chain versus traditional capital markets. There's a convergence of market structure, and you see it with the platforms that are offering both digital assets and equity trading, whether it's the retail facing like Robinhood, which has been on this journey for quite some time and speeding up now that they're allowed to officially, or Coinbase, which is combining spot crypto derivatives, talking about doing equities, tokenized now. And that's pulling the traditional world into 24/7 markets. The New York Stock Exchange, the NASDAQ, they're piloting with the DTC. So we see there's a convergence in both directions where the speed of digital assets is forcing traditional markets to update, catch up, go 24/7, integrate with blockchain, which is a more efficient, superior rail. And then you're also seeing the digital native platforms integrating with traditional assets because still most of the cash flowing assets in the world trade on traditional markets and have all the investor demand and liquidity that we'd like to get onto digital rails.
Great. How about David and Jody as custodians? What does institutional custody look like into this year? And is capital efficiency, collateralized mobility, is that the end or the holy grail of what folks are looking for?
I'll start. What it looks like today in 2026, I think a lot of what you think about institutional custody is less about and it's still very important, private keys, but it's really about the regulated trust bank type institutions, qualified custodians, and then having some prime efficiency associated with it. So it's a very different conversation now, because what I'm seeing definitely in the market is people are looking for those integrated solutions. They want a solution where they're holding their assets securely in custody, but are able to do capital efficiency with it, whether that is having assets that can be staked while it's still in custody, or being able to move it through a prime-like efficiency model where they can keep their assets in custody while the settlement is happening with a third party.
Yeah, I 100% agree with that. You're in for a treat to talk about custody, because there's two of the leading companies in the industry are in this panel. But if you go back like 10 years ago, in every single institutional conversation about crypto, custody would be the first question. And it would be, no, but how do we custody this? What is the kind of regulated framework that I can fit that in? And I fully agree with Jody. This is a solved problem by now, but the questions have been changing, and the custody environment is now getting a lot more sophisticated. So the question is now anymore, oh, how do I secure my keys? How do I secure this secret that is very important that no one can touch and cannot get hacked? I think that specific problem has been solved. But now the question is, how do we fit this in our day-to-day workflows? How do I think about policy, all the different signatures, all the kind of governance that entails? What can I do with my digital assets without sacrificing custody? So I think it speaks very much to the technical solutions that the leading companies have created in the space over the last many years, also the regulatory standing that we've operated on. And now you have this wrapper that has been tested, has been vetted. We just celebrated the 5th year of our OCC charter, so it's been constantly evaluated and tested over time. And I think that's a very important piece for capital efficiency, because if not, it's just leverage, right? So capital efficiency needs to come with the security and the regulatory, the kind of the regulatory wrapper. And I think we're getting there, which should be very exciting news for institutional allocators in this industry.
Yeah, I was just going to say, I think that is your last point there, from my perspective, is one of the keys, which is it is the institutional allocators, right, that are really focused on looking at the model that they're already familiar with, right, across custody, across prime, across clearing and settlement, and saying, okay, what's the version of that, and how does that work in the digital asset space? Some of those models are going to look very similar, and some of them are going to be much more efficient and much more native to our industry, but we have to be able to sort of match up with the way the big asset owners are thinking about the business to get them comfortable.
Yeah, and what are some of the entry points into the market for, say, those asset owners that would align with what they know as far as how they would express that investment, whether that be direct exposure, hedging strategies? What's that? What's that prism of available options that they're looking for?
Right.
Yeah, I think. I think there's a two-way street. So the traditional investors are looking at a slice of their portfolio now being cross-listed on chain, and you're seeing the first instances of that with Galaxy. We tokenized our stock. Figure did the same, tokenized their stock. Again, the big exchanges are looking at 24/7 tokenized equity trading on chain. That will probably start with the big caps. We're not going to be tokenizing a lot of mid-cap equities out of the gates, but if you could trade Magnificent Seven on a Saturday or Sunday, managing risk around geopolitical events that develop on weekends, that's a major global risk tool for traditional managers. I think that's where we're going as soon as the back half of this year, based on the exchange's roadmap. So that's one big pull into digital, but from the traditional world. And then we see a number of use cases from private market liquidity and capital formation to international distribution of U.S. assets. So there's a bunch behind that, but I think the initial pull use case will be the big liquid assets, 24/7 trading and risk management.
Do we see convergence between traditional finance and some of the structures that are in place with digital assets? How do you balance what has worked traditionally without just repeating existing structures, and what's the balance to give the appropriate safeguards to institutional investors.
Yeah, I'll say, I think, your great convergence theory applies across a number of different frameworks, right? And I think if you think about sort of traditional finance, really up until a year or so ago with the change of the administration, most of traditional finance was sort of locked down, right? Primarily because of legal and regulatory uncertainty. There were certainly experiments happening in the background, right? Internal tests, thinking about ultimately where things might go. The foot of the, that was on the neck of the industry was lifted. And now with the progression of Genius and hopefully ultimately Clarity, what we've seen is a massive acceleration, right? Traditional finance now is trying to do two things. It's one, trying to figure out how it backward integrates into the industry. And two, it figures out where its traditional businesses are going to be disrupted, right, or enhanced. And so it's now looking back at who are the players in the industry, who's built, the new infrastructure, and how do they integrate with it. And then also ultimately, what does it mean in a world where blockchain rails create 24-hour settlement, 24-hour pricing, much more efficient collateral, smart contract allocation mechanisms. And so it's all happening in real time. There's still a big question if we don't get clarity or, when there's a new administration, but it isn't just a US story. If you have conversations with any of the large regulatory entities around the world, they're all working at it, right, in different paces. So I think the convergence is inevitable and it's happening.
What's everybody looking at over the next 6, 9, 12 months on what's the market looking for, whether it be from a regulatory perspective, structural perspective, that gets us to a better place, and then maybe the flip of that is what are some of the greatest risks that everyone is thinking about within the market.
I think the big development that's been on markets' minds this year is AI disruption risk, and that's rippling across sectors. I think in part hurt Bitcoin prices. Bitcoin peaked the same time that software peaked in October. And so a big theme is how does this agentic economy, which is accelerating at a terrifying pace, how does it interact with blockchain and these new 24/7 money rails? I think it's a bit of a TBD. We in this industry feel that blockchain's a great settlement rail for AI and agentic economy. It makes sense to have 24/7 real-time payment capabilities, custody capabilities, asset movement capabilities for value to move at the speed of the internet and in fractionalized quantities that agents are likely to move around. But I think to make it a convergence squared, I think that's the next big technology intersection is how AI and the rapid pace of agentic evolution interacts with blockchain. And it's going to be an explosion in market structure, risk management, regulatory policy. So that's the big thing that I'm trying to navigate as an investor.
There's so many cool themes. We could be talking here for an hour, but we have only a little under 7 minutes. Fully agree with the crypto and AI intersection. The one thing I would say, though, I guess I'm also interested is, well, the first, I usually think about Bitcoin and then crypto kind of as separate assets. And I think Bitcoin still has a very interesting investment thesis here that is evolving under this changing kind of monetary order. But it has its very specific call and it has its very specific investment case and dynamics. But then on the other side, we have this big cycle of crypto starting to get embedded in the very rails of our financial lives. That I think is probably going to unfold over the next few years, but we're going to be thinking about today as like the beginning of this massive wave. And again, you have the beginning with stable coins, which is kind of a tokenized dollar that is now at escape velocity. Probably every single financial institution or fintech is racing to integrate stable coins. And then there is these other tokenized assets, tokenized equities, tokenized money market funds, and then the DeFi integration. I feel like this is a kind of a secular multi-year trend that gets me very excited about. There's a lot of these innovations that will probably make asset management different in the next few years. And a lot of them are powered by crypto. There's things like prediction markets. There are things like perpetual futures, which is an instrument that was, I would say, invented or at least popularized in crypto. You have decentralized finance. All these things are converging. So I feel like if we have this conversation in 5 years, things will look a lot different. And now it's a very exciting time.
5 years, I think next year is going to be a different conversation too. It's just evolving so fast. I agree with both of the panelists up here. I think AI is going to be a big disruptor. But when I talk about risks, the one thing I keep coming back to is, we have created some sort of regulatory structure that has allowed institutions and access into this industry and this asset class. What I think is one of the risks to this and continuing to do that is the dynamic between unregulated entities across the globe and regulated entities, right? So when you start interacting potentially with unregulated entities that don't have the same structure, it's going to become a difficult challenge, not only to slowing down some of the rails that we have, but also risk. And that's really about the risk structure you build within your institution. So yeah, I think that's going to be one of the dynamics that we're going to have to deal with in the next year or two.
What about the Clarity Act and the market structure bill? How important is that to the market? Is the market assigning some probability that it may not come to fruition? How are you guys thinking about that currently?
Yeah, I mean, we talked about it a little bit before we got up on stage, and we went from 50-50 to maybe it's not going to happen. I think it's super important. If we were having this conversation a month ago, we sort of felt like we had the momentum and we were kind of on the cusp of it happening. We've had a couple senior players in the industry, kind of hit the brakes, and that has created some uncertainty and, again, questions on whether it ultimately gets pushed forward. I think we're always, and I'm certainly in the category of some regulation and legislation is better than, don't let perfect be the enemy of good. Enemy of the good is the saying. And so not getting something just continues to sort of put a damper on innovation and investment. Hugely important. I'm more of an optimist. I do think we're going to get something through. If I would have been 90% a month ago, I'm probably in the 50-50 camp now.
Yeah, I'm optimist as well. I share that sentiment exactly. I think the poly market and Kalshi odds are bouncing around day to day, week to week. I'd note that it's on low volume, so it might be a weak signal there. But the cause for optimism is that there's bipartisan recognition that it's been a winning position to be pro-crypto. There's a lot of people in this country that really believe in digital assets as a technology, as a U.S. leadership position, and there's not a lot of pushback to that view. So we believe bipartisan, or hope bipartisan cooperation will prevail, and that there's a compromise to be made around particular stablecoin rewards, which seem to be one of the big sticking points between the bank lobby and the digital industry.
Yeah, I'm an eternal optimist, except for in our conversation earlier, I was probably the most pessimistic about just the chances this year, right? I think we're walking into a midterm election. There's just some challenges coming. Clarity is super important to our industry. We're really looking forward to whatever that resolution is. So I have optimism there that it happens soon. But yeah, I think we have been able to come as far as we have in the last 24 months into my intro statement because of the regulation that has started to come out, because we're putting framework around what people are used to. It feels very similar to the traditional asset classes that people are used to investing in.
Yeah, I'm literally at 50-50. So I think it's going to be a tough call. The window is very short. Midterm elections are coming up. But I guess the cause for optimism, as Joe said, is that there's a lot of conversations going on in DC on a weekly, 2 times a week basis, and it seems that we are reaching towards something that seems like a compromise. We just don't know if it will have enough time given the short time window. So I feel like it's going to be kind of a photo shoot. Let's see how it goes.
Great. Well, I think we're at time. Everyone, thanks for coming to join us, and thank you everyone here.
Thank you.
Thanks.